Economic outlook. The global economy is in the vortex of the coronavirus crisis. Containing and preventing the spread of COVID-19 worldwide continue to add significant uncertainty to its function. A host of crucial and challenging questions characterize an emerging new environment on the social and economic front. How serious is the upcoming recession? How long will it last? Which sectors of the economy are most affected? Which ones will rebound? To what extent? Which ones have the best prospects? The global growth is projected to shrink by 3%, in Europe by 4.5% and in US by 3.5%. Closure of factories and businesses and drastic reduction of their production and activity doom the economic scene of most countries worldwide. Prospects. In the highlights, US Treasury Secretary Steven Mnuchin's remarks that the US economy is expected to reopen in May and June with a strong recovery in production in the third and fourth quarters. Economic activity in China resumes while other countries are gradually preparing to disengage from the lockdowns. Markets. A 35% drop in markets in March had a profound effect on active demand. When will it return? A partial market recovery was staged in April, mainly attributed to the fact that major stock market indices rebounded after the strong fall in prices in March. Was post-bear market rally premature and excessive? The current variability is at the level of 45%, had peaked at 85%, while before the crisis was at 14 to 20%. As a general remark, the main stock indices are not compatible with a disaster in the real economy. The biggest economic shock in recent history is unfolding, and the S&P 500 has been down just 11.2% since the beginning of the year. World Economy and Developments, USA. Additional support from the Fed and the Trump administration with a new set of measures to ensure the operation of the states. Unemployment. Jobless claims since mid-March reached 33.3 million, or about 20% of the US workforce. Europe. More support from banks. A top development, the ECB's unprecedented decision at the last meeting of April to lend money at a negative rate. This is an effort to further support commercial banks in order to facilitate and encourage them to lend money to businesses. Example, -1%, essentially paying them in order to borrow. Greece. The Athens Stock Exchange showed some signs of recovery. The offers for the new 7-year Greek government bond, expiration 2027, covered all the demand approximately 3 times, 6 billion, with its yield being 2.02%. Loan amount about 2 billion. China. Signs of recovery as China is in the opening phase of lockdown. Negative GDP growth for the first quarter, -6.8%. Oil. Unprecedented drop in negative levels of the price of April contracts 1 day before their expiration. Shortage in storage capacity due to low consumption and demand. The oil market has returned to some extent, but volatility remains high and demand low. exchange. Euro-USD exchange rate at approximately the same level as March, 1.08. There was an increase in volatility, but the sharp fall of the dollar led to its gradual recovery for the rest of the month. Investment strategy. Preference: maintain liquidity over 40%. Selective positions in periods of low variability. Preference for US shares over European. US stocks account for 70% of the portfolio. Technology sector of the equity holdings over 70%.